guys, welcome back. In today's video, we are talking about why the shorts are afraid, liquidity vanishing, forcing margin calls, and many more in this video. First, we take a look at this. What is so scary that the market makers need to continue to move most of the trades off the AMC to the off exchange, where we're taking a look, and as per usual, what you're seeing is a large percentage of the trades, of course, going into the off exchange. Now, this is obviously something that we have always talked about. And when you take a look at in terms of what the price is doing today, we're down 0.97% despite what the market is doing. That's because they are afraid. You can see when market is going down, AMC is also going down. When the market are ripping, AMC is barcoding. Price is rigged, they are afraid, they are timid. Time doesn't always stay the same, our time will come and it's near. So I want to go break down into this, and the reason why I say this is because we obviously understood that on this particular day where AMC dropped 7%, that was because the overall market, obviously we saw a massive sell-off. We had Nvidia closing down almost close to 10% that day. So the overall market had a sell-off, and when you take a look at AMC going along with it, now I've said this multiple times, AMC is majority held by retail investors, and so we technically don't have that same correlation with the overall market, but we could also understand why when it's going down. But what we have to understand that is if the market is going down and the AMC go down with it, then when the market's going up, AMC should go up with it as well. That's obviously very basic understanding, but yet we don't get that. And why is that? Well, obviously because we know that a lot of the orders are obviously routed into the off exchange. Therefore, the buyer orders aren't actually hitting, and it gives off the idea, the perspective that people are not willing to be buying into AMC anymore, that people are trying to sell the AMC shares, when that clearly isn't the case. We obviously seen plenty of data in the past that has already proven that. And so this is what we talked about with how shorts are afraid. Any chance they can get to push AMC down and make it seem like it's a plausible thing, they do it. But when they need to bring it up, they choose not to. They choose to continuously try to suppress it. And that's exactly what we've talked about. And a big understanding of how to differentiate in terms of why we're not seeing people actually selling AMC is because in a time when the market is going up and we know that AMC being suppressed, the fact it's not going down obviously already shows that people aren't selling. But the reason why it isn't going up along with the market is obviously because they are suppressing the trades. You can see this, and this is one of the biggest reasons for why they are afraid. I kid you not, the Q4 24 or it should be the 25 domestic box office is likely anywhere from 60% to 80% bigger than Q1, which is ending this month. This is why I said we are mere days away from being in a new world. AMC is currently around 0.26 price to sales based on the previous 12 months of revenue, while the box office is about to radically shift, likely forever. And so what we have already seen, and again, this is going off of the earnings we've seen recently, is that obviously AMC has done well. And one of the things we are continuously seeing is how box office are breaking new and making higher records. And so for the year of 2024, we've already seen how well AMC has done. And so going into 2025, we're going to be looking at a very good Q1. But a Q1 is very important, but a Q2 is even more important. The reason why Q1 is important is because it will set the tone for how AMC will perform for the rest of this year. So if we are able to see even an average Q1, it means that Q2, Q3, Q4, we're going to be doing well. But if we see an astonishing Q1, then you can guarantee, you can, have a big confidence in terms of Q2, Q3, Q4 to being exceptionally well, and that's how AMC will grow. Now, on the subject of obviously fundamentals, you're going to be seeing news covering this, but you have to be able to differentiate good news, bad news, real news and fake news, and make sure you always do your own due diligence. Because you can see this. Despite Q4 revenue surge, AMC stock are still sinking. Now, this is something that we've talked about in the past with what they're doing with their titles. So they're trying to make it seem like it's a good thing, but actually they're being negative about it. And you can see despite Q4 revenue surge. So that's obviously the good thing. But the main point is about how AMC is still sinking. Now, like I said, these titles, they always try and give the perspective and incentive for you to stay away from AMC and or to sell your AMC shares. Because what they don't cover is, you can see these AMC articles are so dumb. They never even mention how manipulated the stock is. One of the most manipulated, if not the most manipulated stock in Wall Street history. And again, we've seen this in the past before. When you take a look at the naked shorts, when you take a look at the spoofing, when you take a look at the order routing, like we've covered in the start, this is why they are sinking. It isn't because of the fact, and they even admitted here, AMC Q4 revenue surge. They understand that the fundamentals are well. They have nothing of substance to talk bad about AMC. So they just talk about how the price is sinking. But then they're not saying that, they're not trying to link the price sinking with AMC being bad, AMC doing bad, AMC is a bad company. No, because they can't. They're just saying that AMC is sinking. And the only thing they can link it to as of why AMC is sinking is like we talked about, naked shorts, spoofing, and order routing. And that's why they are afraid. That's why they never, fully go into this. They talk about the Q4 revenue surge, and then talk about how AMC is still sinking. And a big reason for this is because of the liquidity vanishing. You can see here, Fed liquidity vanishing fast. The New York Fed's reverse repo facility is in free fall, and liquidity is drying up fast. From 2 trillion plus in early 2023 to near zero in early 2025. End of Feb drop showing major liquidity stress. What's happening behind the scenes? Market makers, institutions, and hedge funds rely on this to stay solvent. No liquidity equals forced margin calls. If the system is cracking, leverage shorts and synthetic plays could be on borrowed time. Now, we obviously talk about reverse repo is something we obviously take a look at and cover most of the videos. And it's obviously very important to understand this. When you take a look at, what has happened to the reverse repo, you can see that it's a massive drop. Like I said, it will have some volatility. There are some days where it spikes up, but the overall average is that it has been going down. And something that we knew was that had it not been for the reverse repo at the start of 2021, we obviously would have seen the squeeze of AMC and GME. The very fact that the reverse repo went to $1 trillion showed just how big this situation was. It showed how much money they needed in order to obviously suppress this whole situation. And that's how big the situation is. Now, it isn't to say that the whole 2 trillion is just purely because of AMC and GME, but the very fact that we saw when it really first begun and when AMC and GME situation was, and when you link them together, you understand it's very likely that a large percentage of this 2 trillion is obviously involved with AMC and GME. So the very fact we're seeing this go down, the very fact that this is what they rely on to stay solvent, and the fact that if we see this go to zero, hedge funds no longer have any liquidity and that it will be forced margin calls, we don't understand, again, why they are afraid, why they continuously need to suppress AMC. Because by suppressing the price of AMC, by lowering the price of AMC, what it also does is obviously lower their margin requirements. It cheapens the price of creating synthetic shorts, and of course, it just gives them more capital to then suppress AMC even more. And so that's why we see the suppression. But like we talked about, they can't keep this up forever. And you can also see something that, these shorts are doing right now. Citigroup, obviously one of the short sellers of AMC, one of the synthetic AMC shareholders. In fact, we've seen and talked about the Brazilian ADR shares in the past before. Now you can see Citigroup accidentally moved to transfer $81 trillion to a customer. And this is obviously insane because the bank doesn't even have 81 trillion in assets that it could send. The annual GDP of the United States is estimated at around 25 trillion for reference. So you can see that they put up more than 3 times that of the annual GDP of the entire US. Now, one of the reasons why they're doing this, you can see this, is because they need to claim it's coming from that. The stifle investigations from their derivatives desk just before. And you can see Maybe they are rolling, resetting trillions of book. They move dollars out and back. They parked it temporarily in customer accounts, do their reset or roll over, and it becomes a glitch in their account quickly forgotten about. Allows them to not expose their derivatives position. And so one of the things we talked about is understanding that these banks are taking trillions in terms of their derivative positions. And this is something that you can obviously take a look at. And what we've seen is how actually these positions not doing well. We've also talked about obviously the whole situation with swaps of AMC and GME and how that isn't doing well. And so for them to be not trying to show how badly it's going, they obviously need to reset it. And this potentially is one of the ways. And the fact they're doing this obviously showcases, what is actually happening behind the scenes. And you guys, thanks for watching. I'll catch you guys next time.